I'd like to let first of all, those that are listening in, participating, I want you to know that you're getting treated to two incredible talents, deep bench knowledge in tech, investors, and one is more unique in some ways, in the sense that he has both public allocation experience, meaning allocated for a government, Hong Kong government, as well as in his capacity now as a private investor. So without further ado, let me bring them on. And let them introduce themselves. So Hugh, why don't you begin first alphabetically, and then Peter. Hugh, your mic is off.
There you go. I think it works now. Does it work?
Yeah, perfect.
Thank you very much, Catherine. And I also like to thank Craig for organizing this event and inviting me. And it was a great insight offered by some of the speakers ahead of us. Thank you very much. I like to consider myself a engineer. If you rip me open, you probably have like some 1 and 0s spilling out anyway. A geek pretty much my whole career. Born and raised in Hong Kong and went to school, and I also went to the States as well. And eventually I ended up in Toronto, which I've been calling home for the last 30 years. And for what? Really it was because I have this passion about microchip. And way back in the 90s, there wasn't much of microchip in Hong Kong. So, and very fortunately, I was able to join a very small startup back in 93. And eventually it became a $5 to $6 billion company in 2020, year 2000. And watching how the company grew through that 7 years of span, I basically told myself it was naive enough when I was at that age to say, hey, you know what, perhaps I can do that myself as well. And that's when I started my own company with a few partners, my microchip company, with the first check at the time was about $10 million US, and ended up having my own microchip company. Now, that's when I first went back to Hong Kong, because about 2006, InvestHK, was a great organization, reached out to me, and that was at a time when I was building R&D centers worldwide, and we ended up having 8 R&D centers. And InvestHK was very enthusiastic and said, hey, you know what, Hugh, you're born there, raised there, do you want to come and just check out Science Park and all these great initiatives that Hong Kong has to promote innovation? So that's when I started my one of my R&D center in Hong Kong in 2006 as a tenant. And eventually my company went public in 2013, and I decided, 20-some years now in microchip, I'm going to take a break and get into like Catherine into investment. So I explored a bit social enterprise and ended up having a school of my own as well, a few hundred students. And then fast forward to 2017, and that's when the Hong Kong government kind of reached out to me and said, hey, you know what, Hugh, we have this largest government-funded applied research institute in Hong Kong with about 600 full-time researchers. And they were asking me whether I would like to, head it up. I told myself, you know what, I've done startup, been an engineer, entrepreneur, investor. One thing that I have not tried was to serve the people. And it was a great opportunity. So I ended up, going back, taking on the appointment. Again, the second time became the tenant of the Hong Kong Science Park. But this time we took up the whole building. It was one of the government-run funded organizations, and ended up serving my term there for the last 3 years. And I concluded my term, and I came back and to my home in here in Toronto, and engaging on a few projects. And if time allows, then I can perhaps share that with all of you guys as well. Back to you, Catherine.
Thank you, Hugh. Wonderful background. You're being quite modest. Taking 2 companies IPO is an incredible experience. Peter, please.
Hi, everyone. Thank you for having me. Quick background on myself, roughly 20-year Wall Street career. Ended up starting my own fund after being a venture partner with DN Capital for 15 years. Had the pleasure of being involved in 16 companies as a venture partner, including Shazam, the music recognition app, Endeca Enterprise Search. Founded my own company called SoundPays. I realized I'm a terrible entrepreneur and went back to venture and now run Framework Venture Partners. We're unique in that we have 3 pillars to our business. One, a full-time data team. We now track and interact with 30,000 startups across North America and Western Europe. We have a full-time functional team, so CTO, FP&A planner, head of talent, CMO, and CRO. And we have a executive coaching branch, and that executive coaching branch is humanistic coaching. So we work with our startups. We manage roughly 20 startups right now. Our newest fund closed in December, and we look at investing at the Series A, Series B stage, and we try and help founders accelerate to their fullest potential.
Thanks, Peter. I'm going to jump in a little bit and introduce myself. I am the management director of a single family office, and we push out about $500 million of new capital every year. We're global, we're market and sector agnostic. I believe I was invited in this tech space to talk about to participate and shepherd our panel because the topic is hot fintech sectors, emerging technologies. And back in the dark ages in early 2000, I founded my own risk management business, which is a thin client business. And I think, Peter, you and I chatted about that, Hugh. I'm not as illustrious as you. I sold out too early to an Indian company called Cybercom and did not take it IPO. May I begin with asking, Peter, you, based off of the current market risk of 2022 and the imminent and the incursion north of China right now, or west of between Russia and Ukraine, and it's obviously tanked a lot of the global markets. Has your firm looked at adjusting your portfolio? And can you also highlight the sectors in tech that you consider hot, new, that your firm's looking at, and whether or not you've adjusted your risk analysis? Because I do know, and I do also want you to address your proprietary software your firm uses in analysis, because that is really cool.
Yeah, so we see roughly 1,000 to 1,500 startups a month, and our technology crawls the internet for any new technology company set up or founded or any new seed stage investment. I would step back for a second and say, sadly, I'm not young. My family are refugees from Eastern Europe, so we know very well what geopolitical risks look like. And I would say to you that, and this is going to sound unfortunately heartless, but when conflict starts, it's actually a great time to buy equities. It's a great time to invest. Because the biggest part of the risk is actually already happened. And so we would look to a lot of assets actually being very inflationary. And what we mean by that is we would look for the crypto market to explode higher. We would look for a lot of fintech companies to see significant transaction volume. We would actually be incredibly bullish on any kind of technology that enables access to the financial system. Because we think the demand's going to explode now. It's just many people are going to be forced out of the existing system, and they're going to be looking for alternatives.
Thank you. I'm going to follow up with that question in a second, but I want to ask Hugh, having built 2 companies and taking them IPO, what are fintech opportunities, the new sexy tech that you're seeing that could be a fit to go IPO on the SEC?
Well, I don't have a crystal ball, and if you can take a look at the tech area as well, it's actually quite diverse. Microchips on one hand, and then you have fintech on the other. It just happened that during the last 3 years when I was running the ASTRI, the Applied Research Institute funded by the Hong Kong government, that we got to work quite closely with the Hong Kong regulators. So even earlier Secretary Hui, the Hong Kong M8, SFC, and in fact, I think a few of the projects that Secretary Hui described were collaborations between, my research institute and some of the regulators. For example, the auxiliary credit assessment using big data, the E-Trade Connect, as well as some of the talent development scheme. Now, I want to just mix the topic a little bit with, even in the environment of Hong Kong, where there's no shortage of capital. I mean, if anyone trying to argue against that, would be just being argumentative or silly. But questions always raised me in that why is that not sufficient capital are going into venture? I think comparing to Silicon Valley, even a little bit north in Shenzhen, Hong Kong, when it comes to venture investment, is really not the greatest place. One can argue that it's Hong Kong's own success being the one to blame, because when you are an investor, Catherine, you can perhaps expand on that a little bit, with your wealth experience in risk management. There are many other better vehicles to invest into other than venture fund. And also when it comes to investing in venture, you really have to spend quite a bit of time, what you call post-deal management, right? To really help the entrepreneur, setting up some of the strategic partnerships, and so on and so forth. So I think it's why we consider a high touch type of investment. And I think as a result, that's being pushed to the wayside by most of the investors. So that comes the Hong Kong government stepping in, and that's why they have the ITVF, the Innovation Technology Venture Fund, is one of the larger co-investment fund you find in the region. In fact, the firm that I'm working with right now, they are one of the largest co-investor of this particular fund. So I think the government is doing, taking the right steps in kickstarting some of the venture activities. When it comes to which are the areas that I would be the most bullish. Now, first of all, I'd like to take a Canadian perspective as well, because that's where we are right now. I think Canada, we have a great deal of talent that we can offer. In fact, I think some of the census data just came out a few days ago. I think we are, Canada being the only G7 country, I think, with the highest population growth. And I think we added, I think now we're up to 37 million people now. We just added about 2 million people. And majority of that, I think over 3/4 of that are immigrants. And we have a very attractive quality of life here to attract people, like myself some 20-some years ago. So talent is never a shortage here. And we do have some of the deepest technology. We mentioned about AI earlier, 2 of the 3 world leading researchers, AI and AI field, they are Canadian. So, and even Kareem earlier in his talk, spoke about that as well. But then, we don't have access to a larger market, domestically. So we have to look elsewhere. And US being one that we work very closely with. And I think, China, East Asia, obviously is another. So that really sets up this relationship between Canada and Hong Kong quite well. And that's also kind of speak for the importance of the work that Invest Hong Kong is doing right now. Now, from the Hong Kong perspective, you gotta talk about fintech to start. I mean, because they are one of the leading financial market in the world. So I think with that, I might want to ask Peter a little bit, as far as in the fintech area, what are the next big thing, as far as you're concerned?
I think the biggest thing in fintech is the same as it's always been. You want to make sure access to the products and services is secure. It's in regulation. It's moderating all of the rules and regulations that are appropriate to each geography. And so one of our biggest fintech investments and most successful companies is actually a company called Encode. And what they do is they allow full AML and KYC in sub half second. And what's important about that is today, most of the solutions require 24 to 48 hours where you have to upload a document, you have to take a picture of yourself. It goes away to a outsourced center where human beings review the beginnings of a machine learning kind of scan. Incode's totally different, is that their AI algorithms allow 95+% accuracy on AML and KYC. And the number of exceptions are so small that a single individual can handle a firm that's onboarding millions of customers a year. So that is a huge area for us, is the access part of financial products and services. And then an area that we're really excited about, actually super excited about, is how individuals and companies move money and what that money movement looks like, whether it's using public chains, whether it's using real-time payments. That kind of money movement layer is an area that we're very, very excited. And then the last area that we're super excited about is helping small businesses and individuals integrate financial products and services in such a way that it removes friction in their lives. So we think the biggest areas of friction are accounting and tax. And so we're looking for solutions that combine all of those things in one and really make people's lives a lot easier and better.
Peter, let me tag along Hugh's question, which is, since your firm leads also on both Series A and B rounds, how do you compete with the other term sheet submitters to the company so that your term sheet is accepted and that you get to lead?
Yeah, that's a great question. So we would say that we win about 50% of our term sheets, so we don't win them all. And we almost always compete with somewhere around 10 other funds. Those 10 other funds are nearly all American. We would say that that has changed in the last 2 years. In the last 2 years, we went from having one other term sheet maybe to 10. So it's been a huge explosion of competition. And the reason why we win is that the entrepreneurs, if they believe they need help, if they believe that they need somebody who's made thousands of mistakes and catalog them, if they believe they want to work with world-class talent, CTO, CMO, CRO, if they want that, we win. If they don't want that, they just want money, they just want someone to stay in a corner and be quiet, we don't get picked. And it's great for us because it creates alignment. We want to be active. We believe our involvement can allow 10% better decision making or 20% better decision making. And so we actually like that it's a forcing function. So we issue about a term sheet a month and we win one every other month. And so it's working. I would say that we have to continue to get better and innovate and find more partnerships, which is why I'm here and why we look at the bridge to Hong Kong. Is we want to find ways to continue to add value, new innovations, new ways. And Asia is obviously a super attractive market for a lot of our companies.
Thanks. Hugh, your firm, Radiant, is seeding, does more seed, and is a little bit before Peter's firm, since Peter is doing a little bit more late stage. Yours is about 500 up to around $2.5 to $3, $3 million. And you're in a prime position to be supportive of bringing projects, and we talked briefly about that when you and I did our one-on-one, Canadian tech into Hong Kong's ecosystem and using Hong Kong, leveraging Hong Kong for the broader Asia or into China. I'm going to follow up with you, Peter, on that as well. Hugh, could you address how you work with and specifically source these deals, and two, nurture them and bring them into these markets?
Well, you know what? Deal sourcing is always a very interesting topic. In fact, before I was recruited back by the Hong Kong government, I had my two other fund with another partner here in Toronto, Pool Global. But because of the appointment, so I had to kind of leave my fund to my partner to manage. And some of the experience I had, through speaking with all the different entrepreneurs, whether it is in some of the event or dig really deep into the university and looking for the research lab. One thing we realize is that if a deal is good, they usually don't go to all the events and go pitching and this and that. First of all, because good deal usually are highly sought after by investors. Second is that you really have to spend 60% of your time going through all these pitch competitions and this and that, and you really don't have a whole lot of time to spend on your development of the firm. So one philosophy that we have developed is really to go for the deal, not necessarily go to all these different events and functions and wait for them to come to us. That's number one. Number two, I think I think as a broad classifications, you can talk about the two types of deals, the 2C types of deals and 2B types of deals. 2C types of deals, they tend to be very emotional. That's how consumers spend. Business, they're a lot more rational. And because of that reason too, I think 2C deals, they tend to come and go very quickly, and they're a little harder to predict. But 2B types of deal, I think they're a little more sticky, and it takes longer to cultivate. And you can also argue that you can better predict whether one can succeed or not. And that's really how we kind of gravitate some of our investment thesis, not necessarily exclusively to B, but also because of that, you realize that having a high barrier is extremely important. So that brings us back to the tech element. And I think, oftentimes it's really about, how fast you run, and also, almost like a little bit playing, the Mario Brother, video game. While you're driving, you want to like throw banana peels on the track just to slip the other guy up. So barriers serve that purpose, and we want to make sure that any investment we make, they have deep tech barrier that can help differentiate themselves. Now, obviously, you're right about that, Catherine, is that the check size we write usually is not really optimal for mid or late stage. They're obviously much bigger firm to do that, and you need different kind of people too. A little bit, I always equate that to raising a kid. Early stage would be like raising kindergarten kids, and and then mid stage would be high school, and then all the way up to college, and there will be a lot more autonomy. They're self-sustainable once they get larger. So I think the investment they require would also change at the time. So that's really the right time for us to pass the torch, back to someone like Peter.
Right. And I personally angel, and I mentioned that to Peter, that I personally angel up to 100,000 US per deal. And in my head, I'm actually writing a $300,000 check. And the reason why is I try to do follow-on. And part of the seed investment and pre-seed that I really love is the synergy of working with the entrepreneur and having your hands still in the putty, if you will, and migrating that. For the B, Series B and C, we usually come in, the family comes in, and their minimum ticket size is $50 million. Because unless you grow a family office staff-wise, and which cuts into your overhead, and as you mentioned, Hugh and Peter, you have to do the aftermarket. You sign the contract, you sign the subscription, the money, that doesn't end there. If a Goldman Sachs analyst works 24/7 just to manage and follow on 80 deals, okay? Unless we grow, our ticket size has to go up. But I personally, on the angel side, really enjoy the seed opportunities. What I want to ask is, both you and Peter, is that in the due diligence process, what are red flags that you see and say, hey, I'm not going to fund this? And two, what are the flags that you say, hey, this ticks all my criteria. I'm so excited. And it doesn't have to be a specific asset class. It could just be your deal evaluation. And Peter, you might want to allude, perhaps this goes into your proprietary software. So either gentlemen, jump in.
Peter, go ahead, Peter.
Okay, I'll go first. So for diligence for us is pretty extensive but tiered. So before we issue a term sheet, we're doing somewhere around 100 to 200 hours of diligence. Post term sheet before close, we would do up to 1,000 hours of diligence. And what that would include is you should think of a full McKinsey style analysis of the company. and then a 30, 60, 180, 3-year, 5-year plan on what that could look like. And the reason why we do that is we do that to help align everybody and get our functional experts involved. What really causes us to step away, and I'm going to take all the obvious stuff off the table, like fraud or people lying or anything like that. That's obviously immediate no. Is if the unit economics, and by that we mean the cost of acquiring a customer, the lifetime value, all of those metrics look like they can't scale or have issues around scaling. And by that I mean by increasing the number of customers they bring in while maintaining the cost of acquisition or dramatically increasing the lifetime value, that would be a question mark for us. And so we believe strongly that the only competitive advantage in the sectors we operate in, and we don't operate in the high deep tech that Hugh operates in, is really speed. And so we're looking for the speed of execution and how quickly these people and companies can add new customers and how important the problem they're solving is.
Hugh, thanks, Peter. Hugh.
All right, so I'm gonna take a slightly different approach. I think partly because my own personal journey. So I started a company myself, and some shorter, some longer, and some larger eventually, and some not as large, but still public company. I look back and I can't help but to say that I'm just one very lucky SOB, because I think of every 10 you can probably argue that only one would actually have the fortune to walk my path. And so I asked myself, what have I done right? In fact, in the search of that, I can't help but to realize all the things I've done wrong. And I always say, what, only if I could go back and do it again, I could have done it in 3 years instead of 15. Right? So I mean, stuff like that. And also when I look at some of the more successful companies, that I realize that it's not too much about what they've done right along the way. It's about they avoided all the mistakes. Right? So perhaps maybe I can just going back to Catherine's question to talk about as an earlier stage investors, what I would look for. But first thing first, at that time you're investing in people, really in the founding group, who had some vision, yes, maybe some IP and so on. So a little bit like kids, right? I mean, I suppose we have enough parents, along in the audience. You definitely don't want your kid to just do exactly what you say. Turn right, stop, right? And the same is that you don't want them to go out and run wild. So you do look for founders who listen to you with an open mind and have their own thinking and visions, and be able to have an open debate and discussions. Ultimately, it's their startups, not yours. I mean, as VC, all we do is put money in and just set them up with all the right ingredients so they can grow. So first of all, really have to look for founders who has a big ego, but not too big that just never listen to you. Now, as far as areas, I'm going to talk a little bit about the existing or the current economy cycle as well. I have lived through many cycles, right? I mean, when I started my own company, it was right at the cuff of the .com bubble burst. So raising the first check at $10 million way back when was a lot of money. Was not hard. But then the few years from 2001 to 2003 was a grind, and I think people have lived through that. They would know. So you really have to build a business. It was a grind, right?
That was a grind. I was raising 20 million for my Series A, my first round, because I'd raised 8 million for my seed. It was one of the largest seeds, and seeds were growing. I thought I was just gonna go belly up, and I was looking at those my financial model, and I was looking at my run rate, and I said, any day now, I'm gonna have to turn off the lights. And Hugh, yes.
Yeah,
those were hard times.
Yeah, it was a grind. So I think right now we are staring right at a monetary cycle that's gonna be pointing toward tightening. And have a bit, we don't want that. We don't want to see a bubble burst, but we do see interest rate going up. So that for sure. right?
Okay, Hugh, I'm getting a red flag from our hosts, Invest Hong Kong and NCFA. God, I can't speak. NCFA to say wrap it up. So
Right as Hugh was going to say his
I think we're too
punchline.
excited here. All right,
I think
so
so.
I'm going to wrap it up right here.
Okay, one last question, Peter. Co-investments, your firm allows for that. What are you looking for besides what your marketing people kind of said, deep pockets? Obviously, there's got to be synergy. I'm going to end Peter with that question, and then I'm going to give each of you a quick 50-second sum up opportunity.
Yeah, I mean, we would love to have somebody like Hugh be a co-investor, right? We're looking for unbelievably talented people who've been there and done that, made thousands of mistakes, and Hugh hasn't made thousands, I've made thousands, so Hugh's made no mistakes. But people who can add value with their experience and who have the scar tissue to remember what they did right and what they did wrong. So that's really in our co-investors what we look for.
Mm-hmm. Great. Hugh, you want to give 50 seconds because I'm looking at the time. We're down to our minute.
Sure, no problem. So you know what? I'm going to have to do a bit of commercial for Invest Hong Kong. One of the things that we spoke about, and I want to add to that, add to Chris Chen's, the competitiveness of Hong Kong is which wasn't talked about. Even within the Greater Bay Area, we spoke about how many people and size of GDP. Is a supply chain. You can pretty much get anything made within that 1 hour cycle. That saves a lot of costs, inventory costs, financing costs, and also time as well. So now, obviously not in fintech.
You may want to add a little bit of a blurb. Hugh, you may want to add a blurb on Innovation Tech Fund, just because I think that there are other foreign funds listening in.
Yeah, I mean, so the Innovation Tech Venture Fund is I believe is a $10 billion fund. Now I could be wrong on that, so Invest Hong Kong's colleague can correct that.
Yeah, that's HongOng dollars. That's Hong Kong dollars.
Yeah, Hong Kong dollars, and it works as a co-investor to all the qualified VC. So there's a list of qualified VC. You have to apply for it, and then if you see a great deal that you want to invest in, then the ITVF would match maximum of 100% what you invest, and they have certain terms and clauses in there. But it's really aimed to incentivize VC to invest in deals that fits the mandate, which is gonna promote the Hong Kong innovations and startup ecosystem. So
maybe
Invest
Peter,
Hong Kong's
you might
gonna have
want to.
some.
Yeah, maybe Peter, you might want to touch base with Hugh, because that certainly seems like a nice fit. And Hugh obviously has an incredible amount of knowledge base, not just with the Hong Kong government, but the Hong Kong diaspora.
That's awesome. Yeah, thank you for that.
I didn't mean to cut you off, Hugh, but they're bothering me. So Peter.
I'll make it quick. I would just say a huge thank you to InvestHK, who's basically backed and sponsored the events that we put on. So we view ourselves as participants in an ecosystem. We try and give back. We host 2 conferences in Toronto a year. One, the Canadian Fintech Summit, which you're all invited to, fintechsummit.ca. You can sign up. And then we also host the Canadian AI Summit. And InvestHK has been a tremendous partner, huge value add. And I would say for any of the foreign funds who are on the line, do yourself a favor, reach out to Chris and his team at InvestHK. Yeah. They've been unbelievable to work with and talk to, and so practical. And then I'm really, really hopeful that Hong Kong continues to maintain that really critical part as being a gateway, not just to China, but to Asia.
Absolutely. Hugh?
Well, I think Peter pretty much said it all, but I just want to get one word in. I think, really appreciate Catherine's, moderating. I almost feel like I'm just having another conversation over tea. So look forward to seeing you in person.
Yes.
Thank you, everyone.
One last thing, Peter and Hugh, if you can put into the notes so that the participants can reach out to your conference, Peter, and Hugh to to Radiant, and also your wisdom. Thank you.
So I would definitely do that. Thank you very much.
Thank you, guys. Thank you so much for making my job easy. Bye-bye.
Bye.